I wouldn't want to declare earnings on August 5th with the volatility index hitting 65. Haven't been there since the '08 crisis or since COVID, but that's the way it goes. Let's start with the Oracle of Omaha, Mr. Warren Buffett. His stock would be up higher if not for the broader market sell-off. But here's the big thing. $288 billion in cash and cash equivalents, earning 5% risk-free with all the volatility out there and all the market uncertainty. You might start to see a divergence if broader markets sell off. This is probably going to be a decent place to be. But he is invested, so if the market sells off, you can't expect a complete inverse correlation. But that's one to watch. Now, let's get into some interesting ones, and let's get the old dumb head out of the way. Palantir, just a monster quarter. Wow, I love this stock. Massive triple beat, pretty much beating everywhere. 27% year-over-year growth. I mean, what's not to love? Looking at the stock here, we got this giant cup forming. You could even put this cup up to this $45 level, but let's just do it here from about $30 or so. We're going to be back in this cup here around 28, 29 when we open from the gap up, and above 29 this thing looks absolutely explosive. So let's see what happens there. Now, him and hers, some of these GLP-1, the weight loss drugs, the miracle stuff, as long as you don't end up with legislative and regulatory risk, because that's always a big one in this industry. But a great quarter. There was some stuff underneath the hood. I saw some people seeing, like 90, 95 basis points less profit margin than what was expected, something like that. But pretty much revenue, great. EPS beat, guidance beat. And another one, we've got a big cup forming. Bigger the base, blast off, higher the space. This looks good. We're around 18 here when we open tomorrow, so pretty much a flat. And we're going to be in between the near term, 8, 14, and 20 EMAs, and this is on the weekly, by the way, and above the 50, 100, and 200. So this is an interesting one. We might go sideways for a little while, but chart looks pretty good there. And I'm not in this one. I just don't know enough about the industry, but hard to dislike the numbers. Now, a lot of people like this one. Oh, Realty, they're a dividend aristocrat. They were in the fear, uncertainty, and doubt category for a while there because they do some triple net leases to Walgreens. It's one of their biggest tenants, and Walgreens has had some trouble. But, they have ways of structuring the terms and conditions of a potential bankruptcy there. And Walgreens is most likely going to have to make them whole or work out some sort of payback plan if that were to happen. So, I mean, look at it, 98.8% occupancy. Gee whiz. And good EPS, everything in line. Revenue was a beat. They're investing. This one looks good. And well, you can look at the chart here. They double topped around 2021, 2022 here. Interest rates have been coming up, and up. And now broken out of this downtrend and fighting. So they're above all of their weekly EMAs, except they're not above the 200-week EMA. You get above 60 or so, rates start to come down. I like this one into the 60s, possibly even the 70s. And if you chop around here for a little while longer, you're getting 5-6% as a dividend. So what is not to love there? Now, let's just do a quick one on Carlyle because I doubt anyone's really actively trading this stock. But it's good to keep an eye on what's going on in the privates and the alternatives. So let's just see. So Carlyle Group expects a strong pickup in exit deals involving its private equity holdings over the remainder of this year, brushing off concerns that recent market volatility and plunging stock indexes signal more serious problems ahead in the global economy. So this is good. If stocks start to sell off because growth is weak, then liquidity is going to be injected, cost of capital is going to be lower, easier to access, and that's when the alternative space and the private equities should be able to thrive. So this is good from the perspective of value creation in the private space. That could be a good one. Let's see a little bit more in detail here. So they were able to double their fundraising in the second quarter to more than $12 billion. Decent. Of a Japanese buyout fund. So that could be interesting. Record $435 billion in assets under management, $273 million in fee-based earnings. So that is not bad. A lot of red on the screens, classic quote. So couldn't make a conclusion on whether the intraday declines in the market would have a long-term impact because, when there's a margin call, you raise cash any way that you can. So they're a publicly traded stock. They're going to get crushed just like anyone else. But yeah, there's Ares, Apollo, Blackstone, KKR. Last week showed that the investment firms had deployed more than $160 billion between them in the second quarter. So money is getting put back out there. And it's going to be interesting to see how does Carlyle handle the road ahead. But yeah, I mean, they seem to be cautiously optimistic that there is going to be activity. Activity can go well, it can go poorly. It's hard to know. Looking at the stock, another one where we got a cup forming. And this one doesn't look too bad. I mean, it's kind of this cup handle, bull flag type of breakout, falling wedge, cup handle, whatever you want to call it. But then this top wick was ugly, and it has melted through on the weekly. But if you hold here on these weekly EMAs, you're looking a little bit neutral here on this Chaikin oscillator read. Maybe this can catch a bounce, catch a bid. But if you go more recently, I mean, that's a tough look there on the daily chart. It just absolutely got manhandled above 50, and now it's down 20% since then and bled right through. Look at this big gap from 45 all the way down to 40, and now below the 200-day EMA. So not a good look here for the stock price, but broadly in the alternative and private equity space, knowing that liquidity is out there and money is going to be moving around, deals are going to get done, buy side, sell side, transactional stuff, international. Hey, you love to see it from the standpoint of a general market participant, because if stuff is happening, then you should see it reflected in other sectors and industries of the market. All right, folks, you take care.